The U.S. Securities and Exchange Commission, or SEC, has launched a crackdown on crypto staking, which has already affected Kraken, who paid a $30 million fine to settle charges of offering unregistered securities. Now, it appears that Coinbase could be the next potential target of the SEC, as CEO Brian Armstrong was one of the first to report on the staking crackdown. It is not only exchanges that are likely to be the focus of regulatory scrutiny. It is currently unknown whether proof-of-stake-based currencies such as Ethereum will also be the focus of the SEC, and whether a securities classification for ETH is planned. However, it is expected that more enforcement actions will be coming from the SEC, with more exchanges and stablecoin issuers set to receive Wells notices in the coming days and weeks. The SEC, New York Department of Financial Services, or NYDFS, and Office of the Comptroller of the Currency, or OCC, are gearing up for a battle with crypto, stablecoins, and exchanges. They are going after the choke points and targeting exchanges that allow staking, much like the IRS and other agencies targeted certain groups in the past, politically under the Obama-Biden administration through their Operation Choke Point. Operation Choke Point 2.0 is underway, and crypto is in its crosshairs. The choke points for Gary and the SEC will be used to get the most bang for their buck, and they will do this by hitting the exchanges and taking the low-hanging fruit where it is. While it would be a headache to go one by one and hit each coin in the protocol, it is very easy to apply the Howey test to crypto staking and yield farming. Centralized institutions holding yields will be what leads to Mt. Gox and FTXs. All centralized protocols will be labeled unregistered securities and have to lie in the bed they made, while truly decentralized, impervious, unstoppable protocols like Bitcoin will keep on ticking. Ethereum, built on a protocol that the SEC has blatantly warned and labeled as a security, not to mention a 70 pre-mine, may have killed itself. SEC Chair Gary Gensler raised concerns over Ethereum's staking model, known as the proof-of-stake feature of Ethereum's new blockchain, dubbed the Merge, the process in which coin holders can earn financial rewards by allowing a network to use some of their assets could fall under securities rules. Gensler said crypto firms are seeking to avoid the security label because it carries investor protection requirements that many say are incompatible with the asset class. Brian Armstrong warned his Twitter followers that rumors imply the US SEC might ban crypto protocols that support the staking of ETH's token. This warning comes after Ethereum's recent conversion from proof-of-work to proof-of-stake. Armstrong further warned that the SEC is likely to consider the digital asset a security, which is not good for corners. Michael Saylor said in July 2022 that it is pretty obvious that Ethereum is a security. The situation is looking bleak for crypto staking, and there are fears that the SEC's regulatory scrutiny will hinder the growth and development of the crypto industry. However, there are those who believe that the regulatory crackdown will ultimately lead to a stronger and more robust crypto ecosystem. As of March 9, 2023, the crypto market has seen a decline in overall value. The total market cap of all cryptocurrencies stands at $2.43 trillion, down from a high of $3.1 trillion in November 2022. Bitcoin, the largest cryptocurrency by market cap, is currently trading at $58,602, down from its all-time high of $69,000 in December 2022. Furthermore, the crackdown on crypto staking has prompted some industry experts to question the overall approach of the SEC towards cryptocurrency. While many acknowledge that there needs to be regulation in the industry, some believe that the SEC's approach is too heavy-handed and could stifle innovation and growth in the space. According to a report by CoinDesk, the SEC has been sending out scores of subpoenas to companies in the cryptocurrency industry in recent months. The report cites anonymous sources who claims that the SEC is looking to obtain information on a wide range of topics, including the sale of tokens, the marketing of digital assets, and the operations of cryptocurrency exchanges. The report also notes that the SEC has been ramping up its enforcement efforts in recent months, with the agency filing more enforcement actions against cryptocurrency firms in 2022 than in any previous year. While the SEC's crackdown on crypto staking has garnered a lot of attention in the media, it is important to note that the agency's actions are just one aspect of its broader approach to regulating the cryptocurrency industry. In addition to cracking down on unregistered securities, the SEC has also been working to establish clearer guidelines for cryptocurrency exchanges and other market participants. For example, the SEC recently issued a statement clarifying its stance on decentralized finance or DeFi platforms, which have emerged as a popular alternative to centralized exchanges. The agency stated that DeFi platforms are not exempt from federal security laws and that operators of these platforms may need to register with the SEC. The SEC has also been working to establish clearer guidelines for cryptocurrency custody, which has emerged as a major issue for institutional investors looking to enter the space. In October 2022, the SEC issued a statement outlining its expectations for custody of digital assets by broker-dealers and other market participants. The statement emphasized the importance of proper custody procedures and noted that the SEC would be closely monitoring market participants' compliance with these guidelines. While the SEC's approach to regulating cryptocurrency has been criticized by some, others argue that it is necessary in order to protect investors and promote the long-term growth and stability of the industry. As the cryptocurrency market continues to evolve and mature, it is likely that the SEC will play an increasingly important role in shaping its future. This is Diversified Streams. Do not forget to like the video and subscribe to the channel, and we'll see you in the next one.